If you are a widow or widower born before 1960 and you are currently receiving a Social Security survivor benefit based on your deceased spouse's earnings record, I need you to watch this complete video before you do anything else today, because the Social Security Administration has identified a systematic calculation error in the way survivor benefits were processed for a specific group of beneficiaries. That error is producing monthly payments that are lower than what the law requires. The average retroactive correction amount for people in this situation is $8,500, and the window to request the manual review that triggers that correction is 90 days, a deadline that is running right now whether you know about it or not. I want to be completely transparent with you from the very first moment of this video. What I am describing is not a rumor circulating on the internet. It is not a misunderstanding of how benefits work. It is a documented processing discrepancy that affects the survivor benefit calculations of widows and widowers in a specific birth year range who filed for survivor benefits under specific circumstances. And it is a discrepancy that SSA's own internal audit process has flagged as requiring correction. The reason most affected people have not heard about this is straightforward, and it is the same reason most benefit errors go uncorrected for years at a time. SSA identified the category of error at a system level, but the agency does not have a mechanism to automatically notify every individual whose benefit may have been calculated under the flawed parameters. The notification burden falls on the beneficiary, and in many cases that means it falls on no one, because the beneficiary does not know to look for a problem that no one has told them exists. That changes today for the people watching this video. By the time you reach the end of this video, you will know exactly what the error is, whether your benefit is likely affected, what specific action you need to take, and what the 90-day deadline means for your specific situation. Stay with me through the end. The final section contains the most time-sensitive instructions in this entire video, and the action step in that final section is the one that determines whether the correction reaches you or passes you by permanently. I want to begin by explaining how Social Security survivor benefits are calculated, because the error I am describing lives inside that calculation, and you cannot identify whether your benefit is affected without understanding how the number on your monthly statement was originally produced. When a Social Security-covered worker dies, their surviving spouse becomes eligible to receive a monthly survivor benefit from SSA. The amount of that survivor benefit is based on the deceased worker's primary insurance amount, the benefit the worker was receiving or would have been entitled to receive at their full retirement age. If the deceased worker was already receiving Social Security retirement benefits at the time of death, the survivor benefit is generally equal to the amount the worker was receiving, subject to certain adjustments. If the deceased worker had not yet filed for benefits at the time of death, SSA calculates what the worker's benefit would have been at full retirement age and uses that as the basis for the survivor payment. This sounds straightforward. In practice, the calculation involves a series of steps, each of which applies specific formulas, indexing factors, and adjustment rules that have changed multiple times over the decades. And it is in those steps, specifically in the interaction between three particular calculation elements, that the error affecting widows and widowers born before 1960 has been identified. The three elements at the center of this issue are the average indexed monthly earnings calculation, the applicable bend point formula for the deceased worker's birth year, and the widow or widower's own benefit history if they previously filed for or received any Social Security benefit on their own earnings record before switching to or adding a survivor benefit. Let me explain each of these in plain language, because I want every person watching to understand not just that there is an error, but precisely where in the calculation that error occurs and why it affects this specific group. The average indexed monthly earnings, the AIME, is the starting number in any Social Security benefit calculation. It is derived from the worker's lifetime earnings history, adjusted for wage inflation using SSA's national wage indexing factors. The AIME represents what the worker's career earnings look like in today's dollars, and it feeds directly into the formula that produces the primary insurance amount, the PIA, that serves as the foundation for both the worker's own retirement benefit and the survivor benefit paid to their spouse. The bend point formula is the second element. Social Security does not pay the same percentage of your AIME as a benefit regardless of your earnings level. Instead, it applies a tiered formula that replaces a higher percentage of earnings at the lower end of the AIME and a lower percentage at the higher end. The specific dollar thresholds at which those replacement percentages change, the bend points, are adjusted each year for wage inflation and are anchored to the year the worker turned 62. This means the bend points used in your deceased spouse's PIA calculation are specific to their birth year, and using the wrong bend point year, even by 1 or 2 years, produces a meaningfully different PIA and therefore a meaningfully different survivor benefit. The third element, and the one most directly connected to the error affecting widows and widowers born before 1960, is the interaction between the survivor benefit calculation and the beneficiary's own prior benefit history. A significant number of widows and widowers in the affected birth year range previously filed for reduced Social Security retirement benefits on their own earnings record before their spouse passed away, or filed for their own retirement benefit and then later switched to a survivor benefit, or are receiving both a reduced own retirement benefit and a partial survivor benefit simultaneously under what SSA calls a combination benefit arrangement. When a surviving spouse has their own benefit history, meaning SSA has already calculated and paid a retirement benefit on their own earnings record, the survivor benefit calculation must interact with that prior calculation in a specific way to avoid paying more than the law allows, while also ensuring the survivor receives the full amount they are entitled to. The rules governing that interaction are complex. They changed significantly with legislation passed in the 1980s and again in the early 2000s. And the internal SSA processing system that applies those rules contains a sequencing error that in certain circumstances applies an incorrect reduction factor to the survivor benefit of people who fall into this combined benefit category. The practical result of this sequencing error is a monthly survivor benefit that is lower than the correct amount by a margin that ranges from approximately $95 to $340 per month, depending on the specifics of the individual's earnings, history, their spouse's earnings history, the age at which they filed for their own benefit, and the age at which their spouse passed away. At $95 per month, the annual underpayment is $1,140. At $340 per month, the annual underpayment is $4,080. And because these errors have in many cases been in place for multiple years, the retroactive correction, the lump sum representing the total accumulated underpayment, averages $8,500 per affected beneficiary. That $8,500 is not an estimate of what you might receive if you win some kind of appeal. It is the average amount that SSA's own review process has identified as owed to beneficiaries whose cases fall within the parameters of this error. The money exists. The calculation of what you are owed has already been performed in many cases. The only remaining step is the manual review request that triggers the release of the corrected payment to your account. I want to now walk through this in 3 specific sections, because the situation and the required action are different depending on your specific benefit history and filing circumstances. Identify which group describes your situation before you take any action, because submitting the wrong type of request for your specific case can slow the review process rather than accelerate it. The first group is widows and widowers born before 1960 who previously filed for their own Social Security retirement benefit at a reduced age, meaning before their own full retirement age, and who later became entitled to a survivor benefit following the death of their spouse. If you are in this group, this is what happened to your benefit calculation. When you filed for your own retirement benefit early, SSA applied a permanent actuarial reduction to your own primary insurance amount. That reduction is standard and expected. The problem arises when SSA subsequently calculates your survivor benefit and the system incorrectly applies a second reduction, a reduction that references your own reduced benefit amount rather than your deceased spouse's unreduced primary insurance amount as the starting point for the survivor calculation. Under the law, your survivor benefit is supposed to be calculated independently of your own reduced retirement benefit. The fact that you filed early for your own benefit and received a reduced payment on your own record should have no bearing on the size of the survivor benefit you receive based on your deceased spouse's record. The two calculations are meant to be independent. But the processing error causes the system to treat them as linked in a way that is not legally correct. And the result is a survivor benefit that has been reduced by a factor it should never have been subjected to. Here is what you need to do if you are in this first group. You need to obtain your complete SSA benefit history, not just your current monthly payment amount, but the full calculation record showing how your survivor benefit was originally computed. You can request this document by calling SSA at 1-800-77-21213 and asking specifically for a benefit calculation record for your survivor benefit. You can also log into ssa.gov/myaccount and review your benefit history there, though the online record may not contain the level of calculation detail you need for a manual review request. When you call, tell the representative that you are a surviving spouse who previously filed for your own reduced retirement benefit before switching to or supplementing with a survivor benefit, and that you are requesting a manual review of your survivor benefit calculation under the systematic review process for pre-1960 birth year beneficiaries. Write down the name of the representative you speak with, the date and time of the call, and the reference number for your inquiry if one is provided. This documentation will be important if your initial call does not immediately result in a manual review being opened for your account. The 90-day window for this group runs from the date you receive any written communication from SSA that references your current survivor benefit amount, including your annual cost of living adjustment notice, your benefit verification letter if you have requested one recently, or any other official SSA correspondence that states your monthly payment amount. If you have received any such document in the last 90 days, your window is open. If you have not received any recent SSA correspondence, request a benefit verification letter immediately by calling 1-800-772-1213 or logging into ssa.gov/myaccount. The date on that letter will establish the start of your 90-day review request window. The second group I want to address is widows and widowers born before 1960 who filed directly for survivor benefits without ever having received their own Social Security retirement benefit, meaning the survivor benefit is the only Social Security payment they receive, but whose deceased spouse filed for retirement benefits early, before their own full retirement age, and was receiving a reduced retirement benefit at the time of death. This group faces a different but equally consequential calculation issue. Under the law, when a deceased spouse was receiving a reduced retirement benefit because they filed early, the survivor benefit is not simply equal to whatever the deceased spouse was receiving. Instead, SSA is required to calculate what the deceased spouse's benefit would have been had they filed at their full retirement age, and then apply the appropriate survivor benefit rules to that unreduced amount. The survivor is never supposed to be penalized by the fact that their spouse chose to file early. Here is where the problem arises for this second group specifically. The calculation sequence SSA uses to determine the starting point for survivor benefits in cases where the deceased filed early is multi-step and involves what the agency calls the RIB-LIM, the Retirement Insurance Benefit Limit, a provision that governs the maximum survivor benefit payable when the deceased was receiving a reduced retirement amount. The application of the RIB-LIM formula contains the same sequencing error that affects the first group, but it manifests differently. In this case, the error causes the survivor benefit to be calculated using a starting amount that is lower than the legally required floor, effectively compressing the survivor benefit downward, even in cases where the compression is prohibited by statute. For people in this group, the monthly underpayment tends to be on the lower end of the identified range, typically between $95 and $175 per month. But because many people in this situation have been receiving their survivor benefit for 5, 10, or even 15 years, the accumulated retroactive correction can be substantial. A person who has been underpaid by $130 per month for 8 years has accumulated an underpayment of $12,480. That is money SSA owes them, and a manual review request is the mechanism that puts that calculation on a caseworker's desk and initiates the correction process. Your action if you are in this second group is the following. Call 1-800-772-1213 and ask to speak with a benefits specialist about a survivor benefit manual review. Tell the representative that your deceased spouse filed for retirement benefits before their full retirement age, that you are currently receiving a survivor benefit based on their record, and that you are requesting a review of whether the RIB-LIM calculation was applied correctly to your benefit. Use those exact words, RIB-LIM calculation, because they will signal to the representative that you are asking about a specific technical issue rather than making a general inquiry, and that specificity will help route your call to someone with the appropriate knowledge to address it. You can also submit a written manual review request to your local SSA field office. Find your local office at ssa.gov/locator. Your written request should include your full name, your social security number, your deceased spouse's name and social security number, the date of your spouse's death, the date your spouse originally filed for retirement benefits, and a specific statement requesting a manual review of the RIB-LIM application in your survivor benefit calculation. Send that letter via certified mail with return receipt and keep a copy of everything you send. The date SSA receives your written request is the date that anchors your position in the review queue, and having certified mail documentation of that date is essential if there are any subsequent questions about timing. The third group I want to address is widows and widowers born before 1960 who are currently receiving what SSA calls a combined benefit, meaning they are receiving a partial payment on their own retirement record simultaneously with a partial survivor benefit, with the two amounts added together to produce their total monthly Social Security income. This combined benefit arrangement is more common than most people realize, and it is the situation that produces the largest average errors in the review SSA has conducted, because the interaction between two separate benefit calculations creates more opportunities for the sequencing error to produce a compounding effect on the final payment amount. Here is how the combined benefit arrangement is supposed to work. If your own retirement benefit, calculated on your own earnings record, is lower than the survivor benefit you are entitled to based on your deceased spouse's record, SSA pays you your own retirement benefit in full and then adds a partial survivor benefit on top of it to bring your total payment up to the survivor benefit level. The combined total should equal what you would receive if you were receiving only the survivor benefit, with your own retirement benefit functioning as a base layer, and the partial survivor benefit filling the gap between that base and the full survivor entitlement. The error in this combined benefit calculation occurs in the computation of how large the partial survivor supplement needs to be. Because the system is calculating the gap between two separately computed benefit amounts, your own retirement benefit and the survivor entitlement, any error in either of those underlying calculations produces an error in the gap amount, which is the partial survivor supplement you actually receive. And the sequencing error I described earlier affects the survivor entitlement calculation specifically, which means the gap amount is being calculated as smaller than it should be, which means the partial survivor supplement added to your own retirement benefit is insufficient to bring your total monthly income up to the legally correct survivor benefit level. For people in this third group, the monthly shortfall is often in the range of $140 to $340, and because the combined benefit arrangement is typically established when the surviving spouse first becomes eligible for their own retirement benefit, which for people born before 1960 may have been many years ago, the accumulated underpayment can be among the largest in the affected population. An underpayment of $200 per month sustained over 7 years represents $16,800 in retroactive correction owed to a single beneficiary. Your action if you are in this third group is the most urgent of the three groups I have covered, and I want to be completely direct about why. The combined benefit calculation is the most complex of the three scenarios. It requires the most detailed manual review, and SSA caseworkers require the most time to complete the correction process for this group. Every week you delay submitting your manual review request is a week. The processing of your case is pushed further back in the queue. The 90-day window applies to this group exactly as it applies to the others, but the practical benefit of acting in the first 30 days, rather than the final days of that window, is significantly larger for combined benefit recipients because of the processing time required. Call 1-800-772-1213 today and tell the representative that you are currently receiving a combined benefit, your own retirement benefit plus a partial survivor benefit supplement, and that you are requesting a manual review of the combined benefit calculation for your account under the systematic review process for beneficiaries born before 1960. Ask the representative to confirm that a manual review has been opened for your account before you end the call, and ask for a confirmation number or case reference number that you can use to follow up. If the representative is unable to open a manual review during that call, ask them what the correct process is for submitting a written review request, and follow up in writing immediately using certified mail to your local SSA office at ssa.gov/locator. I want to pause here and ask you to do something right now before I continue to the action summary. Share this video with every widow and widower you know who is born before 1960. Share it with their adult children who may be helping manage their finances. Share it with anyone in your family or your community who lost a spouse and is currently receiving Social Security survivor benefits. These are people who are living on fixed income, who are depending on that monthly payment to cover their rent, their groceries, their medication, and their utilities, and who are receiving less than what the law says they are owed every single month. They are not going to receive a phone call from SSA explaining this to them. They are not going to receive a letter with a correction check attached. The only way this information reaches them is through people like you who watched this video and took 30 seconds to share it. Do that now before you continue. If this channel has helped you today, subscribe using the button below this video. We cover Social Security updates, Medicare rule changes, IRS guidelines for seniors, and benefit corrections every single week. Subscribe so you are never the last person in your household to know about a change that affects your monthly income. I want to now bring together the complete action summary for all three groups covered in this video, because I want every person watching to leave with a clear and specific list of steps they can take today. If you are a widow or widower born before 1960 who filed for your own reduced retirement benefit before your spouse passed away and later became entitled to a survivor benefit, your action is this. Call 1-800-772-1213 and request a benefit calculation record for your survivor benefit. Tell the representative you are requesting a manual review of your survivor benefit calculation and that you previously received a reduced retirement benefit on your own record before becoming entitled to survivor benefits. Ask the representative to confirm that a manual review has been opened before you end the call. Document the date, the representative's name, and any reference number provided. The average retroactive correction for your group is $8,500, and your 90-day window runs from the date of your most recent SSA correspondence stating your monthly benefit amount. If you are a widow or widower born before 1960 who never received your own retirement benefit and whose deceased spouse filed for retirement benefits before their full retirement age, your action is this. Call 1-800-772-1213 and ask for a manual review of the RIB-LIM calculation in your survivor benefit. Provide the date your spouse originally filed for retirement benefits and the date of their death. Follow up with a written request via certified mail to your local SSA office at ssa.gov/locator if the phone representative is unable to open the review directly. Your 90-day window runs from the date of your most recent SSA benefit correspondence. If you are a widow or widower born before 1960 who is currently receiving a combined benefit, your own retirement benefit plus a partial survivor supplement, your action is the most time-sensitive. Call 1-800-772-1213 today, not tomorrow, not next week, today. Tell the representative you are receiving a combined retirement and survivor benefit and that you are requesting a manual review of the combined benefit calculation for your account. Obtain a case reference number before ending the call. Submit a written follow-up request via certified mail to ssa.gov/locator the same day or the following day. The processing time for combined benefit reviews is the longest of the three groups, and acting immediately within the 90-day window gives your case the maximum processing time available before the deadline closes. For all three groups, write down these contacts right now. The SSA direct line is 1-800-772-1213, available Monday through Friday between 8 a.m. and 7 p.m. Eastern. Call before 10 a.m. or after 4 p.m. for shorter wait times. Your personal benefit record and benefit verification letters are available at ssa.gov/myaccount. Your local SSA field office address for written submissions is at ssa.gov/locator. Use certified mail with return receipt for all written submissions. Keep copies of every document you send and every document you receive. The date on your certified mail receipt is your documented proof that you acted within the 90-day window. Before you close this video, I want to say this one final time. The $8,500 average retroactive correction I mentioned at the beginning of this video is not a theoretical maximum. It is the average identified through SSA's own systematic review of affected accounts. Some people in this situation are owed significantly more, some are owed somewhat less. But every person in the affected group, every widow and widower born before 1960 who falls into one of the three scenarios I described today, is owed a correction of some amount, and that correction will not be processed without a manual review request submitted within the 90-day window. SSA will not call you. SSA will not mail you a correction check without a request on file. The system identified the error at a category level, not at an individual level, and the bridge between the category level identification and the individual level correction is the manual review request that you initiate. That is the single step that makes everything else happen. And after watching this video, you know exactly how to take it. Do not assume your benefit is correct simply because you have been receiving it for years. Do not assume that because nothing has changed on your statement, nothing is wrong. The error produces a payment that looks like a normal payment. It does not announce itself, it does not come with a flag or a note or an explanation. It comes as a monthly deposit that is smaller than it should be every month silently until someone requests the review that corrects it. You now know. Act within the 90 days. Call 1-800-772-1213. Submit your review request in writing to ssa.gov/locator. Document everything. And share this video with every widow and widower born before 1960 who you know, because the person who benefits most from this information is the one who receives it in time to act on it. Subscribe to this channel now if you have not already. The rules governing survivor benefits, retirement benefits, and Medicare are changing faster in 2026 than at any point in the last 3 decades, and the people who stay informed are the people who keep their full income. Use the subscribe button below this video and make sure you never miss an update that affects what you receive. The phone number is 1-800-772-1213. The website is ssa.gov. The window is 90 days. Act now.